Which would you rather own, Jim, Tesla or Ford? If you had to decide.
Now Tesla.
Wait, what was that? What was that? Tesla?
In this video, Jim Cramer says he's lost faith in Ford and would rather buy Tesla stock. Tesla swings around their gigantic PP, that would be pricing power, this time raising prices in the United States as wait times begin to once again blow out to unreasonable levels. I am definitely not subliminally attempting to influence you to feel and perform your best by grabbing some athletic greens with the link in the pinned comment or by heading to athleticgreens.com/SMR. More on them later in this video. And amazingly and entirely unpredictably, and if you think you heard somebody predict this recently, you definitely didn't, a wave of Wall Street stock analysts are increasing their price targets on Tesla stock, pretending they know what the f they're doing, rather than admitting they're absolutely clueless and just chasing after the Tesla stock price and or attempting to remain relevant by getting their face in the media every time they incrementally increase their price target. Something green tidal wave. Oh, and don't forget, last chance to get your questions in for the latest exclusive Patreon Q&A. I'll be recording that very soon, so this is the last chance. I'd just like to take a moment to check out Tesla stock. Currently $194.76 per share and up 80% year to date. 80, not 8, 80% year to date. If only I'd been buying with every spare cent. If only. But instead, I was panicking, fearful, experiencing doubt, second guessing myself, ignoring my valuation model, ignoring my thinking, ignoring my research, and just getting swept up in the herd mentality. Oh, we're panicking. Okay, time to panic. Oh, a recession. That means no one's buying cars. That means Tesla's going bankrupt. I'm going to sell my shares near 2-year lows because I'm smart. So I'd just like to take this moment to apologize to absolutely nobody. And if anyone's wondering, Tesla stock is now approaching my bear case price target for 2023. My bear case, I've assigned about a 3% probability. It really is the train wreck of all train wreck scenarios. Worst recession you could imagine. Terrible margins, botched production ramps in multiple factories, world-ending kind of stuff. Between you and I think 2023 is going to be a lot better than my worst-case scenario. It's just such a shame I began to suffer from fear-induced brain damage rather than recognizing the opportunity and buying with every spare cent. And now a few thoughts from Jim Cramer, and these are rather important, and I'll explain why. If you haven't heard, which if you've listened to Jim Cramer for more than a few moments, you probably have heard, but Jim Cramer constantly pumps Ford stock. Now, it's got nothing to do with the fact that it's a larger single position in his charitable trust. It's not like people would use CNBS as a platform to pump up stocks or to decimate them by spreading fear, uncertainty, and doubt. It's not like that's why you'd be in the finance media in the first place, and that's not why most guests appear in the finance media, to talk up or talk down a stock, because that'd be stock market manipulation, wouldn't it? Hello, SEC. That obviously doesn't happen. But I have noticed that Jim Cramer seems to be consistently, permanently very bullish on Ford stock. This is very important context for what Jim is about to say.
Which would you rather own, Jim, Tesla or Ford? If you had to decide.
Now Tesla.
Wait, what was that? What was that?
Now
Tesla?
My charitable trust owns Ford. Look, that was a really bad miss.
Wow.
And Jim Farley has to make this quarter. I'm selling that stock.
We had the music up,
That's
but he
it.
said Tesla over Ford and GM.
Well, no, Tesla's got no more insider selling. I thought that was good.
That's good.
Well, and Ron Barron's going to come in tomorrow, and he's going to say it's worth $1,000. Well, you're going to fight that. Tomorrow you'll be asking me, like, wow, what do you think? I said, well, I bought it ahead of Ron Barron.
This is quite a surprising admission from Jim Cramer. Like I said, he's constantly hyping up Ford. They're going to do great, the marquee, Jim Farley's great, blah, blah, blah. Like constantly. And he's just been asked directly, which would you rather, buy Ford stock or buy Tesla stock? And Jim's said Tesla stock, and his colleagues immediately shocked. Literally, hands on the man. What, Jim, what? Are you okay, bro? If you want to see that again, rewind it and watch. And Jim's co-anchors were stunned at his response. That alone speaks volumes. Of course, Jim Cramer's opinion may or may not be worth a whole lot. I don't know, I'm just putting that out there. But the fact that one of the leading talking heads in the mainstream finance media, some may argue the face of CNBS, has just said on the record that he'd rather buy Tesla stock than Ford stock, is hinting at the fact he may have realized that Ford and other legacy automotive manufacturers could in fact be in a little bit of trouble. And they sure fucking are. That being said, I think Ford is probably one of the best positioned legacy automotive manufacturers. Doesn't mean they're going to survive, but if everyone attempting to transition to EVs, Ford are actually in a very good position relative to everyone other than Tesla, who are in a league of their own.
The climb continues for Tesla shares as they're now up almost 2% here in real time, building on a tremendous rally that began the early parts of this year after bottoming out near $100 a share, Jenny. Sounds like Wedbush is on board. Yeah, Wedbush is on board. Dan Ives, a notorious Tesla bull, is raising his price target to $225 from $200, which we're nearing that $200 level.
Oh, hey, I didn't see you there. I was just watching myself. I'm not the only one that does that, right? Yeah, good, okay, cool. Join me. I think it might be interesting to hear what I had to say about a month ago, late 2022, when Tesla stock was down 69% year to date. So anyway, back to me watching myself, because that's what I like to do when no one else is watching, but you guys can watch me. Let's hear what I had to say.
Musk, after that Cinderella ride, I mean, he really needs to navigate Tesla through the storm.
So if you'll take a quick look on screen right now, what we have is an indictment on Dan Ives and his price targets. Tesla stock's around, $250, $300 per share, price target $300. Tesla stock falls to around $250 per share, price target $250. Tesla stock falls to around $150 per share, price target $175. Now, why is this an indictment? Well, you see, it almost looks like Dan Ives and Wedbush are chasing Tesla stock with their price targets. In case you're unaware, a price target is not a prediction of what a stock will be worth at a future point in time. It's what a stock would be fairly valued at. Very different. People often make this mistake. Now, some analysts attempt to outsmart the market and predict, valuation's going to change, multiples are going to change, I'll adjust my price target based on this. Rather than attempting to guess fair value for a stock, they're attempting to guess what the stock market will be valuing the stock at. Very different things and a very dangerous game. You may have noticed I haven't catastrophically cut my Tesla stock price targets all year, despite the stock price getting cut down by more than 50%, in fact almost 70%. My price targets remain largely unchanged because they're not a prediction for what the stock market's going to be valuing Tesla at. They're what I believe Tesla stock will be worth, fair value, based on the numbers Tesla, the company, does in any particular year. Now, it's important to understand the distinction is, if new information becomes available about the company's execution, their numbers, how many vehicles they'll sell, their gross margins and so on, this is a fair reason to be adjusting a price target. But if your price target adjustments basically look like you're following Tesla stock, it's pretty clear evidence that you don't know what the you're doing. You don't even have a valuation model. You're just pulling numbers out of your ass to stay relevant and in the news, in my opinion.
There's no rigor to anything. They're just like, Tesla, let me tell you something, feels like 360. I mean, honestly.
I'm not going to lie, Jim Cramer just perfectly summed up the Dan Ives Tesla stock price target strategy. Oh yeah, the wind's going that way. Okay, $260 per share. Oh wait, the stock's down. Hang on. Oh yep, $175 per share because green tidal wave.
I was taught by Lee Cooperman that there had to be a reason why something sold where it sold. Well, this was the year where that wasn't true.
It has been fascinating to watch people lose all perspective as emotions cloud their judgment and their reasoning faculties. Anchor there confidently suggesting that Dan Ives would never expect Tesla to exceed a $1.2 trillion market cap ever again. Okay. Got Dan, the weather vane Ives, chasing Tesla stock with his price targets. Never makes sense, never has, never will. But I respect his strategy for getting his face in the media constantly. You have a few people whose reasoning faculties still manage to remain online, despite all the turmoil, pointing out that over the short term, could be brutal, but over the long term, Tesla's in a dominant position, there's no competition, fat margins, fat cash flow, high volume, high scale, compelling technology. Why would you want to bet against this company? And as I've said many times, while you're crying, while they're crying, I'm still buying, with every spare cent. Oh, you didn't think we were done, did you? Here's another clip from 3 weeks ago. So Dan Ives suggests that maybe, in terms of Tesla stock, the worst could be in the rearview mirror. In other words, we've hit the bottom. Just to add some context, Tesla stock now close to $120 per share. Dan Ives' current price target on Tesla stock, $175 per share. What's the bet? Given that this is a 12-month price target, what's the bet that between now and 12 months from now, Dan Ives has increased his Tesla stock price target half a dozen times, chasing after the stock, assuming that the stock actually does what Dan Ives thinks it might do and rebounds from the bottom and moves higher from here. My guess is that throughout 2023, Dan Ives' price target on Tesla stock will chase the stock, which may in fact indicate his price target is pure art and zero science. After all, if it was pure science, then you wouldn't need to chase Tesla stock. You'd have a price target that was reflective of the intrinsic value of the company based on the numbers you think they'll do this year. Instead of looking at Tesla stock, it's close to my price target, better up at another 10%, maybe 20%, get back in the media, talk about price target, green tidal wave, China, Tesla's world, everyone else paying rent, blah, blah, blah. Rinse, recycle, repeat. Just putting this on the record now, so if at the end of the year it actually turns out that that's exactly what happened and I've just updated his price target like 4, 5, 6, 7 times in one direction all year, chasing after Tesla, I'll be able to point back and go, who could have seen that coming? Not me. Who could have seen that coming? Not me. Now look, I'm not trying to pick on Dan Ives specifically, I'm just picking on incompetent analysts who don't know what the they're doing. The guy's just increased his Tesla stock price target by slightly over 10%, within the range I predicted, and it's fucking February. I mean, I'm literally on track already. And the reason I share this is not to pat myself on the back. I mean, I make a lot of predictions that are right. It's par for the course. The reason I'm pointing this out is just to help you guys and girls understand what's inside the mind or what isn't inside the mind of a Wall Street analyst. How is it that some obnoxious face on YouTube 4 weeks ago and 3 weeks ago was able to predict what this guy was going to do ahead of time. Exactly. I gave a range of the price target increases. I said maybe half a dozen throughout the year. We've already got one. We're less than 2 months into the year. How is it that I could possibly predict? I mean, unless of course this guy's a fucking NPC. Again, it's nothing personal, right? I've got no problem with Dan Ives. I understand his business strategy. Just chase the price wherever it goes and get yourself in the media constantly. It's good business, I'm sure. But I'm just trying to de-pedestalize these so-called Wall Street analysts and expose them for what they are. Now, there are exceptions. Few analysts stood by their research and their price targets while the stock got absolutely pummeled. But most didn't because they lacked testicles or they just hadn't done any thinking in the first place. Back to the old weather vane analogy. And so I'd like to just put this on the record. This will not be the last price target increase from Dan Ives. In fact, it's going to be the first of at least half a dozen, each incremental increases from where the stock is at the time of the new price target. Let's move on.
Can't believe it still, I have to say, given the volatility of Tesla this year. But if anyone can do it, it's Tesla. And here to tell us more now on the news around Tesla, we also got news they were raising the price of their Model Y. I'd like to welcome in Caroline Woods, senior market correspondent for the network. So Caroline, lots of news to kick off this week in Tesla. No surprise, as I'm sure we'll revisit this one a few more times this week. But what are you thinking for the stock?
Well, the market's lower, but Tesla's higher. That's sort of the theme of, well, I shouldn't say the market lower is the theme of 2023, but Tesla has been bucking any downtrends that we've been seeing. It's up, almost 60% so far this year, really rebounding after, as Alex said, bottoming out about $100 a share. And a few analysts actually hiked their price targets today. Dan Ives, but also an analyst over at RBC, boosted to 223 from 186, maintained its outperform rating. And then Dan Ives at Wedbush boosted to 225 from 200. He's in the outperform camp as well. He was out with a note this morning and gave several reasons for his bullishness. A lot of what had to do around the China story. He said based on recent survey work in the field, the China EV reacceleration story for Tesla is just starting to hit its stride and should be a tailwind in Q1 versus a headwind that we saw last year. Says price cuts coupled with reopening have resulted in a clear demand driver. Says price cuts have swayed 3 out of every 4 EV buyers in China. He's seeing a noticeable turnaround for Chinese EV buyers, favoring Tesla versus domestic players like BYD, NIO, and XPeng. We know competition has really heated up, but Tesla's holding strong. And he says China production is now on a run rate north of 1 million units per year with increased scale and scope. Meanwhile, as for bullish catalysts here in the U.S., you mentioned that price hike of the Model Y. It's also now, because of some clarification, eligible for some of the tax credits through the Inflation Reduction Act. And he says that should be a lever for Tesla.
That's right. Just in case you somehow missed the news, maybe 5% of you did, Tesla's Model Y has now been officially classified as an SUV and is now eligible for EV tax credits with the SUV price threshold of up to $80,000. I'd just like to say a massive thank you and congratulations to every single person in the Tesla community that kicked up a stink. Shout out to Rob Mauer, shout out to Farzad, shout out to everybody. I did my part. In fact, I did actually send an email providing a little bit of feedback. I'll just read that now because, usually what goes on behind closed doors you guys and girls never hear about, but I just want to share because for once, kicking up a stink has made a difference. Here's my email in full. It is unacceptable that the EV tax credit is not available on the best, most efficient and safest fully electric SUV, Tesla Model Y, 5-seat variant. This is either due to incompetence or corruption. I don't pull many punches, do I? In either case, it is utterly absurd that the best-selling fully electric SUV made in the United States is not eligible for the tax credit because someone decided the Tesla Model Y is not an SUV. Yet, gas cars with a tiny battery, aka hybrids, are eligible, despite the battery they contain costing about 1/3 the amount of the EV tax credit. And other electric SUVs are eligible, except for, nice typo, Mark E, which should also be eligible. Shameful, embarrassing, and unacceptable. By the way, guys, just a quick note on writing emails and typos and shit. People are going to get fucking mad as shit. Unless you professionally are judged on how well you spell. I don't even proofread my emails. I just send them. I don't fix typos. Whatever. Nobody misunderstands this. So think about all the cumulative time you spend proofreading and seriously. At the end of your life, you're probably going to be sitting in a rocking chair going, geez, I'm sure glad I spent those thousands of days of my lifetime trying to correct typos when no meaning would have been lost if I just let it be. One of my more controversial opinions, but seriously, unless a typo makes your meaning and message unclear, let it be.
Also thinks that the Twitter overhang is mostly moving or slowly moving to the background for Tesla's stock. Speaking of which, we did see Musk tweeting about the financial health of Twitter yesterday, said it's trending toward break even after he saved it from bankruptcy, but did clarify, saying, to be extra clear, Twitter is definitely not financially healthy yet, but it is trending to be so. Lots of work still needed to get there. So that could be moving into the background and seems to be based on what we've seen in terms of price action for Tesla this year. So as Alex said, up another 2% today, bucking the downtrend of the broader market.
A long laundry list of Tesla headlines to get through. Just another day. And what is surprising about this? 50% off all-time highs, but 100% off recent lows. What else do we expect with the name like Tesla?
By the way, kind of fair, Tesla has, and will continue to be an extremely volatile stock for as far into the future as I can see. The main reason for this, the gaping void, the chasm between perception and reality. I don't believe the stock market is accounting for any future valuation for Tesla's robotaxi fleet, the solving of autonomy, the humanoid robot, the energy business, and ultimately AGI. Never mind future products, HVAC, never mind the fact that they're just about, like literally in less than a month, going to be unveiling the next gen platform. I don't think the stock market's going to respond very well to this because they won't get it, but I'm just telling you right now. I think, for example, today, most people, if they've tried, can understand Amazon, the business. Got their e-commerce, we got AWS, a few other bits and pieces as well. Pretty simple. Same with Apple, same with Microsoft, same with Google. But seeing the lag between a consensus understanding of what Tesla's doing just with electric vehicles, which has been obvious for the better part of a decade, it's taken about 10 years for some people to start to get it. I think we're going to see another example of this same scenario playing out for the energy business, for autonomy, for the humanoid robot, and ultimately AGI. Could be wrong. Probably won't be. Long story short, expect Tesla stock to remain extremely volatile and opinions to remain very mixed.
It's been a busy couple of weeks for Tesla on the pricing front. The EV market leader has adjusted prices yet again. Let's get the current landscape with Yahoo Finance's Pras Subramanian. More changes here, Pras.
Yeah, Rochelle, this is Tesla just ramming through some price hikes after Friday's IRS ruling that they allowed to change what an SUV classifies for the EV tax rate now, using an $80,000 higher MSRP cap that they can take advantage of. So the most recent Tesla price hikes here are for the Model Y long range, up nearly $1,500 to almost $55,000, and then the Model Y Performance by $1,000 to nearly $58,000 is the new pricing for those two models. Now these hikes come after these big price cuts last month, where Tesla wanted to make that Model Y more competitive because it didn't qualify for these EV tax credits. So Musk said in the earnings call that demand was outstripping supply. You see the demand sort of improving both here and in China and places like that. So they're able to hike up as long as they can hit that $80,000 price cap. But the key here, though, I think, Rochelle, is that even though Tesla's doing this and Ford sort of matched them, there's no real price or EV price war just yet. You have GM, Volkswagen, Kia talking about how they want to keep their prices where they're at. They think that they're competitive there.
All right, so I'm going to say it. I don't actually think that these companies think that they're competitive with their current prices, as in not responding to Tesla's price cuts. I think they're petrified of accelerating their already mounting losses transitioning to EVs. They can't bring themselves to lose many thousands of dollars more on every vehicle sold. Plus, these vehicles are such a tiny proportion of their overall sales that it barely moves the needle. Who cares if we sell 26 EVs this quarter or 51? Nobody. Let's just leave it. Who gives a fuck? This is a tacit admission of defeat before the battle's really started.
So they may not have to raise prices just yet in order to match Tesla.
You have to wonder, though, because I remember when they cut prices in China after people had already bought their cars, there was a lot of backlash, people complaining at outside some of the factories and things. Should we just get used to some of these quick sort of on-the-fly price adjustments from Tesla?
Yeah, and it's not like they haven't done this before. They're able to do this because they can, in real time, change their price on their website, whereas most automakers, they ship a vehicle with their Monroney sticker or window sticker, and that's already set, and they maybe change prices a couple times a year. Tesla can dynamically do this whenever they feel like it. So for buyers, you don't really know what the price is unless you lock it in when you order those models. So I think for them, it's an advantage, but then it can also be a disadvantage when buyers feel sort of that they're being taken advantage of by Tesla not being upfront about what their long-term pricing strategy is.
So some fair points there from Pras. Tesla dynamically adjusting pricing in real time versus the old world not doing so. But that final comment there in terms of Tesla and their long-term pricing strategy, bro, it's on their fucking website. It's been on there for a very long time. Spoiler alert. Long-term, Tesla prices down. and further down, and further down, and further down. However, in the short term, they will be adjusted dynamically, sometimes up, sometimes down, depending on incentives phasing in and out, production ramp speed, order flow, and so on. This goes without saying. Long-term trend, down. Short-term, all over the place. If you want the best price on a Tesla, wait forever, because it'll be cheaper in forever than it will be today. So, while some are riding the green tidal wave and or chasing after Tesla stock price with their price targets, I'm riding the wave of energy provided to me by Athletic Greens AG1. I take Athletic Greens every single day, which is about as frequently as Dan Ives updates his Tesla stock price target, so at least we have something in common. Athletic Greens AG1 helps a load with recovery. It's full of superfoods, adaptogens, and antioxidants. It also massively boosts energy, and for me, it's completely eliminated my afternoon fatigue. It also supports immunity, so I'm no longer susceptible to any of the dumb stuff Tesla Q says. And very importantly, also promotes gut health, which can affect mood and energy. Grab your Athletic Greens AG1 now with the link in the pinned comment, or head to athleticgreens.com/SMR. You'll get a 1-year free supply of vitamin D3 and K2. In addition, Athletic Greens is full of 75 high-quality vitamins, minerals, and whole food-based nutrients. It really is comprehensive daily nutrition in a single scoop. Best of all, there's a 90-day money-back guarantee. So what are you waiting for? Take advantage of the offer by clicking the link in the pinned comment, or head to athleticgreens.com/SMR and let me know in a few weeks how you're feeling. And don't forget, last chance to get your questions in for the latest Patreon exclusive Q&A. If you're not a member, you can join with the card in the corner or the link in the pinned comment. I'll see you over there. Love ya.